Hey there, folks. It's Rich Feliciano here, independent broker with David Allen Capital. I wanted to touch on the subject here of factor rates versus interest rates, because I've heard it said by business owners that well, factor rates are predatory. Interest rates are not. Factor rates with alternative business funding are predatory. And so I want to illustrate how factor rates and interest rates really cannot be compared. They're two completely different lending instruments, completely different. Okay, and we're going to go through point by point here the differences so that you understand as a small business owner, you can understand the difference, and it's important to make these distinctions so that we can make better decisions for ourselves, right? So, okay, factor rate and interest rate. All right, so factor rates are expressed as a decimal. Okay, you can see this. All right, so for example, you'll have a factor rate of 1.24, right? Or 1. Um, 18. Okay, so it's expressed as a decimal, where interest rates, as you know, are expressed as a percentage. Okay, so 6.5%. Right. This is alternative business funding 101. You all know this already. I'm just going through some of the obvious stuff because maybe there's one or two people watching this video that may not know. Okay, for their benefit as well. All right. So factor rates expressed as a decimal, interest rates expressed as a percentage. What does this mean when we say a factor rate of 1.24, a factor rate of 1.18? Basically, all that means is that you borrow a dollar, you pay back $1.24 or $1.18, whatever the decimal portion is. That's your percentage. Okay, so you take a dollar, you pay back $1.24, which is 24%. Right? You take a dollar, you pay back 1.18. It's a percentage, if you will, right, of 18%. It's transparent. It's upfront. You know it. It's clear. It's simple. It's direct. Doesn't go up. Doesn't go down. Doesn't compound. Why? Because time is not a factor, right? Oops. Let me write it like this, actually. Take up no time. I hope you can read this. Again, this is for the small business owner that may have met me, may have spoken to me, and I pointed you to this video or to my YouTube channel just so that you can get information here and make good decisions. That's it. Okay. So with factor rates, there's no time factor, right? So in other words, it does not accrue over time. With interest rates, time is the factor. Okay? With interest, time is the factor. Time is the crucial element in lending, in conventional lending. Okay? Time, in terms of how the accruing of interest, it's a non-factor here. It does not exist. Okay? All right, so time is a factor with interest rates, conventional loans. Time is not a factor with factor rates and merchant cash advances, unsecured small business loans, business funding, alternative business funding. All these terms are interchangeable, describes the same industry. All right, so no time factor. Okay, so now I'm going to show you something here. It's really important. So you look at a factor rate of 1.24, right, which is equivalent to paying back 24%, and you're thinking, gosh, that's a lot, especially if I have to pay that money back over a shorter period of time, because then business owners will say this because they've been told this, all right? When you annualize it, Well, gee, you're giving me a 9 month term, or 12 months to pay it back, or 18 months to pay it back, or 24 months at most with David Allen Capital. 24 months is the longest term that we allow, okay, that the funders allow. So, and you think, if I have to pay this back over such a short period of time, 9 months, 10 months, 12 months, whatever it may be, so annualized, that's going to be way more than 24%. But no, again, because time is not a factor here. You can't do that. This, bankers and people who have learned this will say, well, your factor rates are predatory because when you annualize them, right, it turns out to be way more than 24%. Here's the bottom line: is small business owners think simply, directly, clearly. You bottom line it, and that's what it's about. There's no tricks here. You don't like tricky numbers, right? So with the factor rate, there is no time factor, and annualizing what you pay back makes no sense. You pay back 24%. You borrow a dollar, you pay back $1.24. That's it. Whether you pay it back next week or whether you pay it back in 13 months. Okay, either way, that's what you pay back in real dollars. That's what matters, what you pay back in real dollars. Of course, terms are important. The longer term you have, yes, the better, because then that lowers your payment, your periodic payment, whether it's a weekly payment, monthly payment mostly, I know with bank loans, but that lowers your payment. So that's attractive, that's appealing. I get that. Makes sense. Funders in the alternative lending space cannot afford to go beyond 24 months. Why? Because with uh, with alternative business funding, the loans are unsecured, whereas with banks, the loans, that is, are secured. Okay? Alternative business funding, unsecured. Conventional bank loans, small business loan, secured. In other words, you have to have collateral here that you put up. Okay, so that in the event that you defaulted on the loan, if you default on the loan, the bank can grab the asset, that piece of property, that piece of property that you put up for collateral. Well, what happened here? So what we're looking at is a risk-free lending instrument, risk-free to you, that is. In other words, you don't stand to lose property. You don't stand to lose the warehouse, your manufacturing plant, your home. You don't stand to lose any assets. There's no collateral to secure the loan. With bank loans, there's collateral. Okay? Really important distinction. And I know most of you know that, but I need to make that clear, because you have to think about, how is this going to benefit me as a small business owner? Okay, how is this going to benefit me? And so that's what we're hoping to show here. So, unsecured versus secured, and that's why we have short terms or shorter terms. How short? It could be anywhere from 9 months to 2 years, 24 months. Okay, 9 months to 2 years. With conventional loans, we know longer terms. Banks will give you 5 years, 10 years to pay it off. Right? Mortgages, they go up to 30 years. Why? Because it's accruing interest over time. That's why. And because it's secured with collateral, it's secured with an asset that you give up by agreement if you default on the loan. So the banks can afford to wait because it's accruing interest. That's why if you prepay on bank loans, what do you get? A penalty, because they need to recoup some of their money. If you prepay with alternative lending, like with our products, okay, we have prepayment discount programs where you can get prepayment discounts from anywhere from 25 to 100%. Okay, no gimmicks, from 25 to 100%. And we can go over that in detail at some other time. But but that's huge. So here you get prepayment penalties. With banks. You prepay, you're thinking, I'm being responsible, I'm doing the right thing, doing the wise thing. Ah, now I'm hit with a penalty. Here, with us, David Allen Capital, you get prepayment discounts. Again, you have to qualify. Okay, there are qualifiers that you have to meet in order to be eligible for this prepayment discount program. Okay, it's not for everyone. All right, and alternative business funding, for that matter, is not for everyone, but it is for you if you cannot work with the banks or if you won't work with the banks. If you can't work with the banks, if you won't work with the banks, what are you going to do? Come to us. Call me, email me, reach out. Let's talk. Let's talk about your business, what you need, and when, and how much, and when, and for what purpose. Because the speed and flexibility, where else can you go where you submit simple documentation, 3 months bank statements, voided check, personal ID, FICO score, right? Because we have to look up your FICO score. It's a soft poll, by the way. But and you get the money within 48 hours at most, up to $2 million in your account, so that you can inject it right into your business and make the changes to spur growth, expansion, to upgrade equipment, get new equipment, maybe take advantage of a discount program where you can buy wholesale inventory for a discount, but it's a small window of opportunity, so you have to grab at it quickly or else you lose. Okay? With this instrument, with alternative business funding, you can have the money quick, fast, put it right into your business so that you can increase revenues, increase profits, take advantage of whatever it is that you're seeking to take advantage of. You know, discounted inventory, maybe discounted equipment because it's last year's equipment, and your dental X-ray machine is 10 years old. You want the model that just came out last year, and it's now on sale for 50% off. Okay, so those kinds of things, this is what you can do here. So the factor rate of 1.24 or 1.18, and the range, by the way, with us, I thought I wrote this down, I did not, go anywhere from a factor rate of 1.15 to as high as 1.5x, 1.52, 1.55. That's really high. But again, all this is based on the performance of your business. Okay, your business's financials, not your personal credit. It's not based on your personal credit, so we don't need to see your credit history. We don't need to see, elaborate financials and tax statements for the previous 3 years, 5 years, 7 years. We don't need you to submit a business plan. None of those things are needed. Okay, none of those things are needed. There's a low bar of entry, a much lower bar of entry here. Okay, to make it easier for you to inject this money into your business where it's most needed. But factor rates of 1.15 to 1.5x, and nowadays, we're seeing business loans. I looked this up. 6.5%. All the way up to 12.5%. It can go lower. It can go higher. It can go lower, especially if you're a corporation. Corporate rates and institutional rates, like the federal discount rate, much lower. Okay, or you can get up to 12.5%, 13%, 14%. It just really depends on all the X factors that get weighed in by the banks. Okay, except here's the thing. Okay, when you look at, if you go to a resource like bankrate.com, and if you go to their small business loan calculator, and what you'll find is something really, really fascinating. Okay, and here I'm going to do a direct comparison now between the factor rate. Let's just take a factor rate let's say for example of let's go high. Let's go 1.32, right? So you borrow a dollar, you pay back $1.32. This is not a loan. Again, this is a cash advance. I'll explain all that in another video. Don't worry about that. But let's say a factor rate of 1.32, okay? And let's say here, all right, let's say you get a loan at 10%, okay? And so now what we're looking, or well, let's just go. Let's say your business, in terms of its qualifiers, it didn't put you at the top tier, okay? It put you more at mid to lower tier in terms of your lending or your borrowing capacity. So here you're deemed as more of a risk for all the different reasons, different factors that get weighed in. So they have you set in at 12%. Okay. Now, if you borrow 20,000, I'm looking at bankrate.com, bankrate.com, bankrate.com. Okay. Now I'm going to plug in numbers here. Oops. Oh well. Ugh, that was ugly. Okay, so I'm going to plug in. We're going to borrow 20,000. Okay. 20K, 20. 5-year term, right? This is bankrates.com. This is their small business loan calculator. They have different loan calculators, minimum payment calculators for credit cards, mortgage payment calculators, amortization schedule calculators, all kinds of calculators. Great resource, bankrate.com. You borrow 20,000 from the bank at a 5-year term, and you borrow we set at 12% because you're a lower tier customer. Okay, and so at 12%, now we calculate. Okay, so that's a monthly payment of $444.89. You borrowed you borrowed 20K at 12%. Okay, at 12%, 5-year term. All right, 5 years, 5-year term. Okay, 20,000, 12%, 5-year term. Here we're also going to borrow 20,000. Okay, we're going to borrow 20K at a factor rate of 1.32. Okay, with an 18-month. Well, no, not 18. Let's say at 20,000. Let's say 9 months. You know what? Let's put this higher. Let's put this 1.35. Why not? Let's make it ugly. Okay. You borrowed. You get an advance of $20,000 right into your account within 24 hours. Same day if you apply early enough, and it's same day decision too if you apply early enough. If not, next day. 20,000 into your bank account at a factor rate of 1.35 at a 9-month term. You have 9 months to pay it back. Okay, so here the same 20,000 at 12%, 5-year term. You have 5 years to pay it back. 24 months, 60 months versus 9 months. Wow, nice, right? It is. All right, now with the business loan, okay, by the time you're done paying back the 20,000, the 5-year term at 12%, you will have paid back a total of $26,693.34. Okay, $26,693.34. All right. Now, here at 1.35, you're paying back 27,000. Okay. 20,000 you borrow at a factor rate of 1.35, 9-month payback, $27,000. Now the payback is daily. It's by ACH withdrawal. Okay, it's not a percentage of your credit card receipts. There have been other innovations now in this industry where now we can take that payment either daily or weekly. All right, so daily, and it's the withdrawal, by the way, happens only Monday through Friday, not weekends. So the Saturday and Sunday revenues are yours to keep, or you can, pay it off faster, of course. Make more payments if you're making weekly payments, make higher payments. But the case, the matter here is this 20,000 at a factor rate of 1.35. You pay it back in 9 months. You're paying back a total of 27,000, and and that's 35%. Okay, and daily withdrawal is going to be $150 Monday through Friday. Okay, daily payment 150 Monday through Friday. Okay, daily payment $150 Monday through Friday, or $750 a week. Okay, which is 3,000 a month. 3,000 a month times 9 months, 27,000. So you pay it off in 9 months. Here you get the 5-year term, 20,000 at 12%, 5-year term. You're paying back $26,693.34. Now, in terms of real dollars that you're paying back here, okay, let's take the interest and divide it by the principal. So we're going to take the interest of 6,693. We're talking about real dollars, actual dollars paid back here. Okay, we're not talking about, okay, divided by 2, 1, 1, 2, 3 equals, you're paying back 33% here in real dollars, 33.46%. That's what you're paying back to the bank. You're paying back 33.46% in real dollars. Okay, so that 12.5%, it accrues, it compounds, and at the end of the term, you did not pay back 12.5% of the principal. You pay back actually 33.46% of the principal. Here, your factor rate was stated up front, 1.35. Okay, 35%. What do you pay back? 35%. Nothing accrues. Time is not a factor. It's not the same lending instrument. It's two different creatures here, so you cannot compare them. And then people will say, oh, well, then when you annualize it, though, then it goes up to like 300% or whatever it goes up to. Here's the thing. If I lend you $100 and you agree to pay me back $25, that's 25%. And so let's say you pay me back in a week, okay? You pay me back $125 a week from now because you get paid. So now you pay me back $125. Now we're done. We're good, right? You borrowed 100. You pay back 125. You paid 25%. But if you annualize it, well, 25% times 52 weeks is going to be $1,300. Okay? So annualize is 1,300% in this case. That's insane. You're not paying back 1,300%. But if you annualize it, sure, you can make it appear that way. It's sort of like the difference between, the metric system and the imperial system for measurements, right? So you can say, yeah, my car goes 250 kilometers an hour, and I'm thinking, wow, man, that's super fast. Holy smokes, 250 kilometers an hour. But in our imperial system, I think that's what it's called, the imperial system, or the British system, something like that. I think it's the imperial system. But anyway, I don't know. But anyway, so in our miles per hour instead of kilometers per hour, we do miles per hour, and so in actuality, that might end up being, I don't know, 175, 180 miles per hour or whatever it is. Sure, it's fast, but it's not. Doesn't seem quite as fast. Well, the metric system is one world. The imperial system is a different world. And where there is overlap is just a matter of perspective, because one is looking at the other from the one side. That's it. That's it. So when you're looking at it from the conventional loan side, okay, you're thinking of it one way, but in actuality, the alternative business lending space is its own world. and it has its own instruments that work in its own way. It's very different, very completely different. Okay, so you cannot really compare the two. Anyway, I just wanted to bring that out. Wanted to bring that to your attention. I will be bringing out more insights, more information as we move forward, of course. And the whole point is, how can we help your small business? Whether you're a dental office or a small clinic or a retailer or auto repair shop, or if you're an IT company, or if you're a construction company, or if you're a restaurant, whatever you may be, a bowling alley, what are you doing? What do you need? You cannot work with the banks? You won't work with the banks? Okay, reach out. Let's talk. Let me hear what your plan is, what your desire is, and let's see if we can find a good solution for you. We have 20 funders, 20 alternative funders, lenders to choose from. And actually, you're not choosing. It's one application that gets reviewed by 20 different funders and lenders. You might get 3 offers. You might get 8 offers. You might get 12 offers. Who knows? You might get none, right? So, but we have different programs, we have different products, we have cash advances, we have lines of credit, we have the prepayment discount programs, we have payment processing, right, where up to 95% of your fees are eliminated. So those fees that you pay monthly to the credit card companies, the 2, 3, 4%, whatever it may be, would would you like the option of not paying those fees and actually keeping that money in your business? That could be significant. But in any case, we have different solutions. I don't know what your situation is, right? You don't know what our solutions are. But what matters is, what is your situation? What does your business need? And let's have a conversation around that, okay? And then we can take some simple steps, see what the options are, explore it together, and then see if there's a fit. And if there is, great, let's move forward. And if not, then hey, we'll part as friends and you'll find better options. And if you can work with the banks, work with the banks. I think it's awesome. It's great. Okay? But if you can't or you won't, let's talk. Give me a call, email me, visit my website. I'll have that information included in the description. Again, this is not meant for a general public audience. This is meant for small business owners who want to grow, want to expand, want to upgrade equipment, or if you might be in a pinch. Whatever it may be, let's talk. Let's get you the help that you need. This is Rich Feliciano, independent broker, newly certified independent broker with David Allen Capital. All right, it was great spending this time with you. Thank you so much for taking this time with me. This went longer than I wanted it to, but hopefully it was engaging, informative, and enough that maybe perhaps we could have a conversation. Okay, many blessings to you, many blessings to all of us. Remember, we are one. Always, we are the unity is real, the oneness is real, and that's my ultimate principle that I operate from. So thanks again, many blessings, and I hope we speak soon. Bye bye.